Hello guys and welcome to the Trading Fanatic channel. My name is Iliya and I'm so excited about this video because I'm going to share with you the holy grail to Forex. I know a lot of you guys and many traders are looking for some special strategy, robot, EA, artificial intelligence and whatever it is, but I can assure you this is not the case. So in this video, I'm gonna share with you the most powerful concept, according to me, that can skyrocket your trading for the long term. So if you're excited about this as well, before continuing watching the video, make sure to hit the subscribe button, hit the like button, and turn on your notification bell so you don't miss on this brutal content. So let's go to have a look at what I have for you. Okay guys, so what is the holy grail? According to me, it's risk to reward ratio. R&R, triple R, however you've heard of it, that's it. So don't get disappointed straight away. I know, I'm 100% sure you are aware of this, but it is very powerful if you have a deeper look into it. So let me give a quick explanation of what risk to reward ratio is. So basically it's the ratio of your risk towards your reward. So you have one risk towards two reward. There are numerous examples. I don't want to go for them, but let's say you're flipping a coin with a friend and he tells you, if you flip this, you're giving me €1, but if you flip the other, I will give you €2. So in this occasion, you have 1 to 2. Are you taking this challenge? Of course you are, because even though you will win or lose 50%, if you flip the coin enough times, you will come profitable in the long run. So in this video, I'm gonna show you how do we apply this in trading. So I will give you a few tips. I will show you how it's done. And yeah, basically there are some details that you have to be aware of for your profit taking and stop loss. So let's go right now to see how do we calculate it real time on the charts, and then we're gonna switch back for further explanation. Let's go. Okay guys, here we are on tradingview.com. I will leave a link in the description because I get a lot of questions sounding like, what trading platform do you use, where do you draw your charts? So I will just leave a link down. I'm sure most of you are aware, but yeah, I think that's the best software for charting. So what about the tool we're gonna use? So here you have on the left, you have your trend lines, fibs, and all those good stuff. And here you have long and short position. So I've clicked the starts there in here. So here is your short position and here is your long position. Let's just work with the short one. So I have a compact labels mode here. So yours will look like this, but this is very messy. So you can see here risk/reward ratio. So that is your risk to reward ratio, that is your target, and that is your risk here, your stop loss. So if you want to minimize it, to make it with less characters here, go to double click on it, go to style, compact labels mode, hit OK, and you have a very, very good looking box. So basically this is your stop loss, this is your profit, and as you move your profit down, you can see your risk to reward ratio starts to increase. As you move your stop loss up, it increases, and vice versa. So that is the tool, that is how we're gonna use it. So if you want to go short from here, you just plot your tool and you decide on the level for your stop loss, and then you start searching for potential take profit areas. But just basically that's the tool we're gonna use. Stop loss red here, mine is blue, yours probably is red and green, but yeah, so that was quickly. Let's go into the more interesting stuff. Okay guys, that was just a quick explanation because I know some of you are not that familiar with TradingView, and I just had to explain the boxes we are using. So a very important detail I'm about to share with you now is your stop loss. So I know a lot of you guys are first calculating your take profit, which is a huge mistake. So in order to enter a trade, you have to have a valid and a safe stop loss. So with your stop loss, then you go to calculate your risk. I have a video on how to calculate your risk, so make sure to check it out. Later, according to where price action is and where your stop loss is, you have to search for a level to take profit. So let's say you want to go short, you have your stop loss, but there is a supportive region very close to where price action is now, and your risk to reward ratio is 1 or even less. Are you taking this trade? I hope not. So I'm going to show you right now how your stop loss can influence majorly your risk to reward ratio, and how you can manipulate your stop loss to get a better risk to reward ratio, how you can switch between aggressive and more conservative trades, and what risk to reward ratio you should be targeting. Okay, it's getting interesting. Let's get into it. As I already told you, your stop loss has a major influence on your risk to reward ratio. The bigger your stop loss is, the less risk to reward you can target. Why? So let's give a quick example here. Euro USD, let's say you identified this kind of area here to be a potential double top, and you want to go short here, let's say, and your stop loss is going to be, let's say, 40 pips. So do you think 40 pips is a lot? Well, to me it is, because I usually target stop losses of 15, 20, maximum 25 pips. And for me, 40 pips is a lot. For some traders, it is less. But for 40 pips risk, you would expect price action to move 80 pips at least to hit your 2R. And if you want to look for more risk to reward ratio, you're starting to aim for two big targets, 120 pips. So do you get it, why a big stop loss can sometimes hinder you from having a bigger risk to reward? You can see the level of support here, let's say, and you want to take your profits down here. This trade is absolutely fine, 2.6 risk to reward ratio. So let's quickly have a look at another example. The same situation here. Let's say you go to the hourly time frame to identify an entry, and you see those rejections here, pin bars, massive pin bar with bearish engulfing here, and you decide to enter here after this pin bar. Where is your stop loss on this occasion? It's above structure, right? So this is your current price action which you're working with, sorry. And where is your support level? It's down here. And you have the same percentage, 2.6, with 39 pips, and you had the same one with 120. Do you now see the difference of how you can manipulate your stop loss to get a bigger risk to reward ratios? Imagine you held this trade to this support down. Look at this. You have an 8.40 risk to reward ratio. So it is very important that you have your entry rules. If you go to the 15 minute, let's make it a little more aggressive. You see this pin bar here. That's your entry signal. You go like this and you put your stop loss above this pin bar. So currently you have 8 pip stop loss. This 2.6 target we were targeting on the 4 hourly only has become 15. And usually your shorter term targets are going to be achieved in literally hours. So just have a look here. Price action just push down, a little bit of a liquidity grab here, and boom, take profit. And that was just in 16 hours. So you really have to get to know your trading style, guys. Are you a swing trader? Are you an intraday trader? Or are you a scalper? Personally, I'm an intraday trader and I work with 20 pip stop losses. That's it. But if you target major moves, so for example, you identified that after this massive bullish push, you have the engulfing candle here and you enter like this. So I will not enter like this because your stop loss is too big. You always have to have some area here above after when you're targeting reversals, and your potential profit is going to require 130 pips, not to say 200 pips if you target this one. And this trade took you 14 days. That is 2 weeks of trading in order for price to hit your level. Let's say we want to enter with an intraday strategy. Okay, here we are. So you have this, okay, you know that is 1.14. So you think, okay, price is going to reverse here. Boom, bearish engulf on the hourly time frame. Again, your stop loss, you should have a little bit more space. So your stop loss becomes 28 pips. And your profit will be achieved much faster and with only 80 pips. Let's say you're more experienced and you see this kind of range here, price breaks below, retest, second retest, 1 hour double top here, and you enter here after this bearish engulf. Now your stop loss is even less, it's 20 pips. And your target is immediately getting filled, you can see, with just a few hours. So this is the power of manipulating your stop loss. So you really have to decide on a time frame for entries, on a time frame for managing your trades, and on a time frame for structure. So you can be trading the daily time frame as well, and you identify this consolidation here. Okay, after a bullish push, price action starts to distribute orders. I just want to take a short position. I think the market will continue down and I'm taking a short position, and your stop loss is 160 pips. And you have to wait. Let's see how many days this is. You have to wait 84 days for price action to hit your take profit. And that is swing trading, guys, or position trading, which is very, very, very different to the style we're trading as retail traders, because we want to get in those shorter term moves, grab a few pips and get out of the market. So let me talk to you about the power of using bigger risk to reward ratios. Here is a picture I really wanted to share with you guys and to elaborate a little bit more on it. So what do we have here? We have risk to reward ratios and we have win rates. So if you don't know your win rate, make sure you calculate it. Take a streak of trades, 25, 50, 75 or 100 trades, and see how many of them come profitable, so you know your win rate. If you want me to make a video on how to calculate your win rate, make sure to let me know in the comments below. So I'm going straight away for an example of myself. I usually trade with 40% to 50% win rate. I haven't gone above 50, and I'm completely honest with you right now. I am not ashamed to say to you that only 40% of my trades are winning and that I'm losing 60% of the time. However, I only trade 3 to 1. I don't go below 2.5. Let's say that is my maximum. When we join the dots, what do you have here? Profitable. Even though you're winning only 40% of the time, you are still profitable. And do you care about something else? No, you don't, because what is important for us as traders is that our equity curve is going up. That is how a trend moves. So how does a trend move? It has pullbacks as well. Do you recognize this? You always will have losses. You can't be winning 100% of the time. So it's very important for you guys to not to feel very disheartened after you have a loss. If you are strictly following those risk to reward ratios, you will come profitable, I promise you. So let me give you an example of how I approach my risk to reward and win rate. I will go with an example from this week. I lost one trade on Monday. Then I lost another trade on Wednesday. So let's say I'm risking 1% per trade. So that is 2% lost. However, for every 1% that I'm risking, I am willing to win 3%. Then on Thursday, I won a trade. I had a winning trade. And how many percent did I get? 3. And how many percent did I lose? 2. 3 minus 2 is 1. So finally, I had a 1% profit, although I lost 2 trades and won only 1. That is the biggest advantage of having a bigger risk to reward ratios. And yeah, very, very powerful. So let's have a look. If you're trading 1-to-1, you have to be trading, your win rate percentage should be above 50, because else you cannot be profitable. You can see with 2-to-1 though, you are profitable on 50% and even on 40%. Isn't that amazing? So you can be losing 60% of the time, but you will still be profitable and you will be making money if you're systematic and you're executing always and you're very strict with your risk to reward ratios. If you're trading 3-to-1, you can be profitable even with a 30% win rate, guys. And that is super low. You're losing 70% of your trades. 4-to-1 as well, you can be break even at 20%, and 5-to-1 you will be always profitable no matter your win rate. So that is the picture. Have a look at it, screenshot it, print it out. That is very powerful. Decide for yourself. If you are a swing trader, I would advise you to target 2-to-1. Why 2-to-1? Because usually for 3-to-1 you will have to wait a lot of pips. That was a very ugly box. You have to wait a lot because your stop loss will usually be bigger, which will result in a much bigger take profit, which will take a lot of time. If you're an intraday trader like me, go for 3-to-1. 2-to-1 is okay as well. 2.5 is okay, but 3-to-1 is perfect to me. Yeah, and you can have a winning percentage of 40 to 50%, which is nice. You just have to have a systematic approach to the market and always be strict. If you're a 30% trader, you should be targeting 4-to-1 or 3-to-1 in order to be profitable. And that's it, guys. You should play with this chart yourself, but always remember that you can't win them all. Here you have 60% and you don't have 90 and 80, because if somebody tells you he's winning 90% of the time, there is a big chance he's lying. And yeah, I don't know what to say about these percentages. So calculate your win rate, make sure you know your minimum risk to reward ratio, and be systematic, guys. That's it. Please have a look at this chart, print it out, and it is very powerful, I promise. Hey guys, I really hope you enjoyed this video and you found something useful and you're gonna implement the strategies and tips I mentioned to you. So if you really like this video, make sure to hit the thumbs up button, share this channel, because I really want to grow a little bit more and spread the knowledge I'm providing. Make sure to leave me some feedback down in the comments, get on a chat with me. I would love to chat to you guys and share even more knowledge. So thank you for staying up until now. I really appreciate it. Have a smashing week and see you on my next educational video. Thank you, guys.